Dan Ives joins us here at Post 9, Wedbush Securities Analyst, to break down some of those numbers. Let's, I guess, begin with Apple. You seem relatively, I think the phrase that's been tossed around is good enough for now. Make sense?
I'd say that was about as bullish as you could have gotten from Cupertino and Cook going into an iPhone 16 cycle, which hasn't even begun. Not just in terms of the guidance. China, I think, this is their last negative quarter from year over year. That starts to be a tailwind. Look at services, that remains rock solid. To me, it's on a scale of 1 to 10, call it a 9-8 relative. And that's why I think this is a stock that powers through the headwinds we're seeing. And it's hard to be bearish on Apple going into what I view as an AI-driven super cycle for iPhone 16.
Will there be a debate about that strength versus the macro consumer worries we just spent 10 minutes talking about?
Yeah, look, that will be the debate. But, I mean, I'll be in Asia again this week, and everything we've seen is 80 million units is what we started for iPhone 16. Now it's up to 90. So this is going to be a balancing act, as we've talked about a lot. But in terms of the data, in terms of the quarter, in terms of what you saw from Microsoft, from an Azure perspective, you look at what you saw from Google, you look at what you saw from an AWS perspective for Amazon, the AI revolution story, I believe, is well intact. And all of our checks, this is not a time to panic, despite the white knuckles that we're seeing in the market.
The FT is reporting that Elliott Management told investors recently that NVIDIA is in a bubble and the AI technology is overhyped, and that the reality is not matching the hype. You totally disagree, I know.
I couldn't disagree more relative. If we were here before earnings, before conference calls, and I think we even talked about it, let's see what numbers look like. Look at the Azure acceleration. Look at what Lisa Su talked about from AMD. We saw what we
thought Azure was disappointing
in terms of the acceleration that they're guiding for second half. That's really talks about the monetization, that moment is right here. And my view is, look, the haters have continued to hate. The bears have been there for the last few years. I get right now it's easy to come out and kind of yell fire into a crowded theater in tech. We don't see it because it's not just from the calls.
You see the value matching the hype.
I actually think the street is underestimating what is going to be $1 trillion of AI CapEx over the next 3 to 4 years in terms of across tech. And nothing that we saw here in any way dents the thesis.
No, you're right, Dan. And listen, none of them are backing off their CapEx plans. To your point, I mean, AWS, actually acceleration at AWS in terms of revenue growth, up 19%. There is still, though, this larger question as to whether you're going to ultimately get that return on investment over time. You obviously believe that will be the case. But what do you see on the ground in terms of applications that are coming in the near term that will start to at least alleviate any of those fears some investors may have?
Sure. From the enterprise perspective, and we'll hear it from Godfather of AI, Jensen NVIDIA, in a few weeks, the use cases and the amount of enterprise right now that are on that AI path is up 4 or 5x. So these enterprises are on the path from what I believe are going to be use cases across healthcare, financials, insurance, retail. As we've always talked about, it all comes down to show the monetization. The spending's there. And I think when you look at what Sue talked about, Nadella, what we talked about from Sundar, Jassy, this revolution is happening. The monetization phase is now just starting. I'm not going to see that we're going to have air pocket between the CapEx and when revenue comes, but to bet on this and to bet against it, to me, like to bet against Cook and 2.2 trillion in terms of where we ultimately see, the actual install base, and you look at actually right now an AI revolution coming to Apple, that's a tough bet.
Would you give it a year? If it doesn't happen in a year, right, if the rhetoric doesn't change, then would you start to get nervous?
I'd say if we sit here in January, February, and we haven't seen it. We haven't seen the monetization from a software perspective. We haven't seen it from an actual monetization outside just Mag 7 to call it second, third, fourth derivative. If McDermott comes and all of a sudden he's negative on AI, then that's where, of course, we have to take, sort of look at it. But right now, it's actually more emboldened because of what we see, not just from earnings, but from our checks.
I've never seen Bill McDermott negative on anything.
Oh, well, he has pivoted before. Yeah.
And it comes if McDermott, Sue, Nadella, Cook are seeing something, I'll take them despite many that are right now kind of throwing gasoline on the fire.
Alright guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the CNBC clip. Today they talked a lot about Apple and how Dan Ives sees Apple going into an AI-driven super cycle. We're also going to take a quick look at Nvidia. They moved over 20% in one 24-hour period, guys. I don't hear anybody talking about it. That is a crazy move. We had Amazon and Apple report earnings after the bell yesterday, and Amazon dropped at one point down 13% today, so we're going to take a look at that. And the VIX spiked over 59%, guys. It is just absolutely wildness. There's pure panic in the market. We're going to break down all of it. If this is your first video, thank you for being here and welcome. The blue line is the 45-day moving average and the green line is the 200-day moving average. We'll start by taking a look at Apple. You can see they've been on a tremendous run and we've had a pullback right to the 45-day moving average where we've been consolidating for several days. Apple just released earnings last night. They beat on the top and bottom line. They beat on just about every single metric. So Apple is looking very good and they were able to stay stronger than most of the market today. As I said, Amazon also reported earnings. They were down almost 13% at one point. Apple was positive all day and almost up to 2.5% positive at one point. So much stronger than the market. Good guidance. We haven't even gotten to the iPhone sales, guys, that are coming next year. And Dan Ives is calling for an AI super cycle. So this stock remains bullish, a lot more bullish than most of the market that is absolutely falling apart. As long as it can keep this momentum from earnings now and hold this 45-day moving average, this is going to be one of the better looking stocks that haven't fallen apart yet. We should be able to consolidate, make a little bit stronger of a support before we head back to the upside. If the market is going to keep falling and crashing like this, guys, all bets are off though. No matter how good individual stocks are doing, if the overall market is getting decimated and the VIX is up 20, 30, 40, 50, 60% in one day, that's pure panic and it's going to hurt the entire market. So we really have to be careful when investing in times like this. They always end up producing great buying opportunities for the long term when you're patient and have an investing plan. Here's the Nvidia chart quickly, looking beautiful, holding this ascending trend line almost to the T. But I wanted to show you guys this 20% move that happened on Tuesday afternoon. Tuesday after the bell, Nvidia dropped all the way down to $100.01. And by Wednesday afternoon, it was up to $121.60, guys. That's 21.5% in one trading day that Nvidia gained. And we've given it all back the next 2 days. We have some incredible volatility in the market, guys, and you have to take that into consideration when investing. Here's Amazon getting absolutely obliterated, guys, from 191.50 all the way down to 160 at the low point. That's 15.8% in 2 days on one of the biggest companies in the world. These are some gigantic oversized moves, and that's why you always want to have some money coming in so you can keep dollar cost averaging into these markets throughout dips, and you'll set yourself up for the long-term future, guys. We'll quickly take a look at the VIX from yesterday's close to the very high of the day. The VIX jumped 58.3%. Now it only closed 25.8% up, which is still astronomical, guys. That is pure panic. If you ever wanted to know how the market's really feeling, look at the panic indicator. That's basically what the VIX is. The faster that the VIX goes up, the more people are literally panicking out of their positions. Here's the NASDAQ. We have been holding this ascending trend line for months and months now, and we finally broke through it. So it looks like the next support level somewhere over here. Maybe that's why we got bid up today. We've got a lot of resistance turn support right here. If we can't hold this, we're going to be visiting the 200-day moving average, guys. And the same goes for the S&P 500. We've had this ascending trend line. We've respected it for months and months. We finally broke through it. We're kind of back at a resistance turn support here. If we can't hold this area, guys, we're headed back even lower, maybe to 523, maybe even to the 200-day moving average. So this crash can get worse. It could also snap right back around and be a huge fake out, get right above that trend line and keep going bullish. Investing is very risky, especially at a time like this. So be patient, do your research, and invest only how you feel comfortable. I hope you guys enjoyed the video and the breakdown. Smash that like button and subscribe if you haven't already, and I'll catch you in the next one. Peace.